HMRC are cracking down again, and this time there might be a £300 penalty coming your way. With CARF, the crypto asset reporting framework, which has been implemented at the beginning of next year, 2026, this is where certain exchanges, brokers, or custodians, and centralized exchanges at that will have an obligation to report to HMRC your wallets, the data on your wallets, your name, your UTR number, or maybe even your national insurance number. Now, this is already fairly negatively received, shall we say, from the crypto bros and those within the crypto space. However, they have amped it up again by implementing a £300 penalty for those who do not want to comply. This means that the RCASPs, the reportable crypto asset service providers, will have an obligation to report certain data to governing bodies. And this is not just nationally. So how are HMRC cracking down with all of this within the UK? Well, for starters, as mentioned, the exchange data is to be sent to HMRC with said KYC'd information. And if you are declaring the correct taxes and you have an accountant, much like myself, helping you along with all this, you're doing the best that you can do and you're paying your taxes, so you're fine. It's aimed at those who are trying to sidestep the system and evade taxes, because evading taxes is illegal. So this is not about those who are already in the system necessarily, though it might flag that they're doing it incorrectly. So for those accountants that are watching this, please make sure that you have all the data for your clients. And if you are a retail investor yourself worried about this, please ensure that you have the data. So how else are they cracking down? Well, HMRC are sending even more nudge letters. They've already had a couple of rounds of that thus far. I would say that this is your last chance. I know last year I thought that was the last chance. Consider this your second life. If you do not know whether you need to report anything or not, figure it out and figure it out fast. Another way that they're cracking down is with threat of investigation. So if you come forward and you volunteer your information, the penalties and the repercussions will be much, much less than those who are caught, if you like, where HMRC were to open a formal investigation and figure out what's going on for you. Whether they can or can't at the moment, I don't really know. I know they do have tools, software, and some ability, but if they open up an investigation, I don't care how squeaky clean you are, it's not going to be fun. So yeah, they're fairly serious about this now. So what do? Well, gather your data is number one. Step one is gather data. Now, the data itself can be annoyingly incomplete. You would think that the API integration and the CSV files should match. They don't tend to match. So I would say if possible, get both, because one can always plug the gaps in the other. Certain exchanges like KuCoin or MEXC or Binance, you might have a difficult time getting the information, or there's a limitation to it, or it's just incomplete data. So you will spend some time trying to rebuild that to the best of your knowledge, of course, and again, will take time. As time passes, it's going to be more and more difficult to get historical data. So I would say frequently, at least once a year, if not every quarter, or at least monthly even, get that data, secure it, put it aside, because you never know when you're going to need it, especially if you're not sure if you need to pay taxes or not. The other thing you need to do is to start reconciling the data. Now, just because you have the data doesn't mean it's going to be correct. So you would need to use some form of software. There's plenty around that are reputable and third party, of course, to our particular organization. But it will significantly reduce the work because it puts all the data in one place and starts to amalgamate it in a way that you can bookkeep. Much like if you were to just throw your bank feeds into, say, Xero or Sage, and then save the reports, it's going to be wrong. It's the same with crypto taxation. You need to do the reconciliation, the bookkeeping, as it were, because there will be missing data. There will be transactions that aren't linked. And of course, there's going to be some subjective questions within it all. For example, airdrops. Is it taxable upon receipt? It depends. It really depends. So you need to input that data and really have a human element and an advisory element, if you like. Again, my firm can do this if you don't want to or can't. And that's the last thing, really. If in doubt, get a professional. There's a few reputable professionals around the country that can deal with this type of thing. Me personally, I'm an award winner in this category, and there's a few of us who congregate often to talk about this type of thing and how we can lean on each other and pick each other's brains. So there's a fair few around here. So definitely have a shop around if you need us. Tax is complicated. Crypto is complicated. Crypto tax is even more complicated. So why are HMRC doing it now? Well, it's part of a crackdown to try and recover an estimate of £315 million worth of tax revenue. This is a significant portion of what needs to be brought in to plug that black hole, as they say, in Parliament. Now, this is an amount of taxes that could help the economy. Don't get me wrong, it's not as much as it sounds in the grand scheme of things, but every little bit will help and push us towards what we're trying to do as an economy. So it's definitely a significant enough number, shall we say, to deal with that. So they're also doing this because they've given us enough warning, to be perfectly honest. I've been talking about this for quite some time now. I've only recently obviously started to talk about this on YouTube directly and TikTok and other platforms, but they have given us ample opportunity here. It is an absolute minefield. It is difficult, but there are people out there now like us that can help. So at some point, HMRC need to amp it up and say enough is enough. If you're not reporting, you ought to be. There's going to be consequences. The final reason is that I believe HMRC is starting to get the hang of things. Like I said, they do have tools and some ability to deal with this type of thing. I think it's time that they're stepping up their game right now, which is understandable. If there's underpaid taxes, why not go after it? It was only a matter of time, if you ask me. To be perfectly honest, it was never a matter of if HMRC will step up to the plate and start really swinging for the fences. It was a case of when they were going to, and it sounds like they are now. There's been some significant changes and movement within the space in HMRC in terms of cracking down. Ample opportunity for those retail investors and everyone in between to come forth and deal with this. So there wouldn't really be adequate reason for someone to step forward and say, I did not know, I had no idea. It's been going on for a few years now, so please do. And this is a genuine warning from me. As you can tell, I'm normally a little bit more lighthearted with this type of thing, but I think it's a serious case right now where you need to start thinking about your particular position and if you need to act or not. Again, if you need me, please do comment below, share this, like this, so people can get hold of this information as soon as possible. I'm happy to answer any and all questions to the best of my ability. All I ask is that you support the channel in any way that you believe you can, whether it's a like, a comment or a share, or hopefully even a subscribe.